Hello and welcome to a brand new episode of Majlis and Markets with your host Hassan Javraj. Majlis and Markets brings you thought-provoking conversations with influential leaders in Islamic and global markets. As usual, before we begin today, wherever you're listening to this podcast, please remember to like, share and subscribe. You can also send your feedback, comments, questions and suggestions to our email address hassan@majlisandmarkets.com. In today's episode, we're talking about Islamic finance in Central Asia. Despite a young, tech-savvy and predominantly Muslim population, Islamic finance in Central Asia remains small and underdeveloped. The region's financial services and Fintech sector also lag behind their global counterparts. Joining us today is Abdullah Kurbanov, co-founder of Alif Bank, a leading challenger bank in Central Asia. He's also the co-founder of Ayan Capital, an Islamic car finance provider in the UK. In our discussion, we explore the nuances of fintech and Islamic finance in Central Asia. Abdullah also shares his insights on managing a fintech and establishing a new venture in the UK. Abdullah Kurbanov, welcome to Majlis and Markets. Good to have you here.
Thank you very much, Hassan. Pleasure to be here.
Likewise, Abdullah. It's been a long time since we caught up, but your story is really fascinating to me, and I really wanted to interview you given your new venture. But before we get into all of that, Abdullah, you've got quite an interesting background, not just with Alif and your background in private equity and mining, but to get to that, could you give us your story, or could you give our listeners your early life and your story?
Okay, yeah, sure. So I was born in Tajikistan, a beautiful mountainous country, lots of lakes, beautiful nature. And I've got my education there, but then for my undergraduate degree, I went to Turkey, and then for my master's degree, I was fortunate, I was blessed, alhamdulillah, to study at the LSE. Alhamdulillah, had the scholarship as well. Wouldn't have been able to afford otherwise. But after that, I went to investment banking. I worked at UBS for some time and financial consulting, and then I did private equity in metals and mining in Mongolia. After that, I returned back to Tajikistan because I always wanted to go back to Tajikistan. So everything I've done before that, I've always seen as a getting prepared to go back home. So that's in a nutshell my life before returning to Tajikistan. Yeah.
Oh, great. So you traveled around. So you went from are you from Dushanbe or are you from somewhere else in the country?
I am from Dushanbe, yeah. My father is from the north of the country, south of the country. My mother is from the north, and I was born in Dushanbe.
Right.
Everyone in the family are doctors, and I'm the only one who went into finance and entrepreneurship.
Very good. Yeah, no, I've heard really interesting things about Tajikistan, and it's unfortunate history up until very recently, right? About 30 years ago, they had a civil war.
Correct. Yeah. So Tajikistan was part of the Soviet Union, and after the breakup of the Soviet Union in early 90s, we had a civil war. It was, lots of people, including our family, lost someone, and it has been a very, of course, challenging time to rebuild everything that was broken, destroyed during those times, and generally, it's but thankfully, alhamdulillah, it's the last, in particular, last 20 years. I think the power to rate has gone down significantly compared, to early 2000s. There's still lots of things that can improve in the country for sure, but for sure, there is safety, there is security, there is education and literacy rates are high, and there are lots of positives as well. So, alhamdulillah, so that's sort of the backdrop of the environment I grew up. So in my early years, my early education, there was during that civil war, so we had to move around quite a lot. So my I had to go to the north of the country, back to the Shambe, etc. During that war. It was tough for my family. I was too young to understand all of it, of course. But looking back, I realized how challenging things were.
And then you moved to the UK to do your studies, I think, as you said, and then you went into private equity or consulting. Was it banking you went into first?
So I did a little bit of all of that. So I first did financial consulting. It was with Oliver Wyman, a
All right.
financial consulting firm. We were quite strong in finance in particular, and it was a great learning experience. That's the time when I first learned to build scoring models, and I've been doing that ever since. how to score the how to do the underwriting, to how to do credit risk analysis, etc. And even some programming back in the day from those days. So that was my first experience, and we primarily worked with banking clients, and also involves quite a bit of travel, and that was the first experience I had right after my university here, from after graduation, and then afterwards I moved to investment banking. So I did, and I thought, what investment banking role would prepare me most for going back home in the future, and as you know, Tajikistan again is a country with a lot of natural resources, and being able to do the best use of those natural resources, I always believed would be very beneficial for the country. So I chose a metals and mining industry team within UBS, where I worked as an investment banking analyst. And after that, there was some senior people from the UBS who had left the bank and had established established a team within the private equity, a team that looked into Mongolia in particular. And Mongolia was growing rapidly within the metals and mining world. It was the fastest growing country back in the early sort of 2011, 12. So I decided to take the role as the vice president for mining investments with the firm, and moved to Mongolia. It was also a very, very interesting experience.
Ulaanbaatar.
Yeah, yeah.
Was
So
that
yeah.
in Ulaanbaatar, or what was that?
Say again, please.
Was that in Ulaanbaatar, or was that somewhere else?
Exactly, Ulaanbaatar. Yeah, Ulaanbaatar, as it's known, the coldest capital in the world, gets minus 50 degrees in the winter. So it was a great experience as well. We were mainly looking for investments, private equity type investments, to make within the copper, coal, gold, etc. And there was back then there was a lot of the mining sector in general was booming. So uh, gave me a lot of exposure to lots of new skills and negotiation, and yeah, it was good times.
And how long did you do that for?
That was for about a year, and actually, it kind of became a segue for me to return to Tajikistan, because as part of that role, I went to Tajikistan to look for some opportunities within the mining sector to potentially invest, and as I was doing that, I've met some uh, business people who invited me back to go back to Tajikistan, and I thought maybe it was the right time. So I was invited to become deputy chairman for one of the sort of oldest banks in the country, and I thought probably now is the time, and that's how I eventually moved back to the country, to Tajikistan.
And when you started your journey, Abdullah, going to LSE and all these things, was the end goal always to end up back in Tajikistan?
Yeah, absolutely, absolutely. That's been from early on. I mean, that's something my parents have always, talked about as well. My father is a surgeon by qualification, and he's been invited to Germany, to other countries, and but uh, he never saw himself anywhere else but Tajikistan, and he brought within us, he educated that and it's yeah, it's part of the sort of culture within Lots of Tajik youth who go study abroad and then come back home. Still, lots of others sort of prefer to stay in other countries, but I think there's something within certain groups, in general within humanity, right? Everyone has certain affinity for their home country. Everyone wants to do something for their home country, some bigger values to live for, and that's been one of the values in our family.
Fantastic. And then obviously, I think you set up Alif, or you were a co-founder in Alif. Maybe you could tell us a little bit about Alif and its journey and how it began.
Absolutely. So once I returned from Mongolia, and I was in the banking sector, I realized that that the banking sector had lots of positives and negatives. On the positive side, the banking system in Tajikistan is good for entrepreneurs because there are four levels of licenses one can go for, and you can slowly build up. You can start with the lowest level, go for the next license, and so on, and essentially that's how I ended up doing. It's fairly large because when you want to start a new business, you want to start in a sector which is a large market. You don't want to be focusing on a very very small niche. That caps sort of your upside potentially, and the banking sector tends to be large in every country. It is obviously highly regulated as everywhere else. On the negative side, though, the simple things like payments, they were considerably underdeveloped. So for making a simple utility bill payment or sending someone money, you actually had to go out of your house, take a transport, go somewhere, pass the money, or if it's a utility bill, you quite often had to queue up in a bank, make your payment, your taxes, everything. So it's such an inefficient use of your time. Things that can be done on a click of a button, it takes hours. The non-performing loan ratios within the banking sector were quite high back then. For the banking sector average, the non-performing loan ratio was about 46 to 50%. Can you imagine? High, very very high non-performing loan ratios within the banking sector. The service tended to be not great. So when you went to a bank, you would usually face a guard who would tell why did you come, essentially? What do you need? And then you would try to find your way to the right person to speak to, etc. There was a different understanding of customer service within, especially the banking sector. So we wanted to change that. We wanted with my co-founders, with my colleagues, we wanted to bring in new experience, and especially a technologically driven experience as well. And and on top of that, we always wanted to do things in a Sharia compliant way. So we initially, Hassan, we wanted to build the first Islamic bank in the country. And that required about $10 million in investment. So we were looking around for investors. We couldn't convince any investors. We were quite young back then as well. So establishing a bank from scratch, for a young group of entrepreneurs without much experience of entrepreneurship at that point, I think I understand why we couldn't convince any investors, and we decided just to go with the smallest license we could afford ourselves. After a while, we decided to do that, and in 2014, together with my co-founders Firzaus Mirzoev, Zulshora Matloev, and an angel investor, we started Alif with a microfinance license, but with Islamic principles in mind. So all the products we built from the start were in compliance with the principles of Islamic finance, to the degree that the traditional regulatory environment would allow us to do. So from the start, for example, our deposits were based on revenue sharing. Our financing was based on murabaha type models. So and we can talk about that more. But yeah, that's how Alif started and the backdrop of the banking sector when Alif started.
Fantastic. And I think, if I'm not mistaken, Tajikistan Central Bank introduced Islamic banking in 2014 as well, right? The law.
Correct. In 2014, the Islamic banking law was introduced, but back then the challenge was that the law was there, but there were no um, they're called instructions. So sort of sub laws, regulatory.
Like directives, more like directives than.
Exactly, directives and other things, which there was lots yet to be done before one could feasibly actually, have an Islamic banking license or establish an Islamic bank. So the law was there, but still lots of things had to be done to actually bring it into practice.
And Tajikistan, like obviously with its history, as you mentioned, with the civil war, and I think it's like other former Soviet Union countries, right, where it's still quite secular in nature, but the population are like demanding Sharia compliant products, right?
Yes and no. I think the reason why we wanted to build Alif as an Islamic bank or as an Islamic financial institution is not to bring demand. It's not that, it's not because, that would be a great marketing point or something like that. Not at all. It's just for ourselves, actually. We believe that we either do it in accordance with our faith, or we don't just do finance and banking at all. So in many ways, building Alif as an Islamically principled financial institution brought us lots of constraints, not opportunities. And to this day, 90% of customers who come to Alif, they come not because we are working within these principles, but because they want a technological, a user-friendly, a quick, a great service. That's why they come. And going back to those constraints, we always thought that we believed, and it turned out to be the case. Those constraints made us better. In many ways, the innovation DNA that today Alif has is there precisely because we always had to work within certain constraints, and we had to be more creative because we had to compete with established institutions which did not have such constraints. So by default, you have to be creative in your services. You have to be much better in other things to be able to compete. So those constraints actually made us who we are. And simplest things like buying a core banking system, licensing a core banking system. In early days, outsourcing that is usually a better decision, because you first want to build out your service and you want to have some ready-made solution. But when we were looking for ready-made solutions, everything was of course built for traditional banking and with our services, with revenue sharing based deposits, for example. We couldn't actually execute any of those outsourced solutions. So we were forced to start writing our own software. And that made us into a fintech. And today, Alif has the largest IT team in our part of the world, and the most within our part of the world, the most secure, the most user friendly software and everything. And we started day years ahead of this became kind of a more a trend, if you like, in more recent days, more before the fintech notion came to our part of the world. We started years ahead because we were forced. We had to start writing our own software. So going back to your question, for us, it was our own decision, not something to attract customers. And customers come to us to this day not because of Islamic finance, but because of the service and the quality of the service and the ecosystem of products we've built, and the market in general. Of course, the country itself is by sort of regulatory wise, etc. It's a secular country, and constitutionally it's a secular country, but of course the majority are Muslims, and generally within the population, you see various sort of, some are practicing, some are not practicing, but 90% plus, of course, are Muslims, and brought up as Muslims.
And Abdullah, how would you characterize the last decade since inception? Like, what have you, like, would you say are your proudest achievements with Alif?
Um, the there are lots, alhamdulillah, to talk about. But the thing that makes me personally happiest, the thing that makes me feel blessed all the time, is actually the kind of people who are in Alif. And the one thing that I think, the 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 differentiating factor within Alif was not just everything. It all started with the right people. It all started with the right people, with certain principles, with certain values. Um, we and the more this type of people came to Alif, the more it attracted similar type of people. And I'm blessed to work with Sursho, Firdaus, Tilawar, and Gulanor, and Nuruddin, and I can go on and on and on, mention hundreds of names, Hassan, because honestly, we have the truly the best team in our part of the world, and it's always about, once you have the right people, you can do so many things. Lots of things that Alif has achieved, it wasn't a top-down idea. It was quite often bottom-up ideas and execution. So um, that's what I personally feel blessed about. And now, in terms of the scale of Alif, Alhamdulillah, we have grown to 1,200 people. We've served 2.5 million customers. We started as a small microfinance organization with just 3 people, but in 2020, finally, we got our full-fledged banking license after all. Alhamdulillah, within a year from then, we became the most trusted bank in the country. And Visa chose Alif as a strategic fintech partner, and back then the only such strategic partner in the entire Central Asian region. And within a year from becoming a partner with Visa and launching our products, we became more than 50% of the market. So before us there were like 9 banks which were issuing Visa cards for many years by then, but within a year of our launch, we had 50% of market share in Visa payments and cards. Today we have 90% market share in point of sales finance. We have 55% of market share in mobile payments in the country. Hundreds of services are done on a click of a button with an Alif Mobi super app. We are leaders in e-commerce. We successfully expanded to Uzbekistan. We became leaders there in point of sales finance. Today we have about 30% market share. Our revenue today is a run rate revenue about $80 million. Alhamdulillah, we're profitable. We raised a round in 2021 of $58 million, 8 million equity, 50 million debt, and this was the largest round for any Central Asian startup for 3 years running, and alhamdulillah, it's been blessed in all these respects. This journey was quite alhamdulillah was very full of barakah, alhamdulillah.
MashaAllah. So yeah, you launched this bank in Tajikistan or as a microfinance institution, and obviously worked your way to get a full-fledged banking license. And then
Yeah.
I think a market like Tajikistan, it's not like say the UAE where it's a wealthy country. I would say Tajikistan is not like on a GDP per capita, it's probably not a wealthy country, right? And it's quite a landlocked country. So you're
Yeah.
serving a different kind of clientele, right?
Yes. Tajikistan is landlocked, and that drives a lot of the economic dynamics in the country, because it's not just landlocked, it's landlocked in a way that makes it one of the most expensive countries in the world to import something into or export something out of. And that, therefore, uh, it's a hard place to, let's say, build a business that would then export, I don't know, some manufacturing sort of things. It's you're just disadvantaged from the transportation perspective. And um, it is to this day, unfortunately, despite the fact that the pirate rates have gone down significantly in the last 20 years, it's still not a very well-off country. So people, have to migrate to other countries to work and send money home. And but alhamdulillah, that people are still very cheerful. There's lots of hospitality, and people love guests, and there's a different dynamics. Of course, those challenges don't necessarily mean people find happiness in lots of other things, but economically, of course, there are many challenges and opportunities. And yeah, so the customers that Alif serves is the population, because the important distinction here also to draw is that providing services to retail customers is more expensive unless you use technology. And if I look back again in early 2010, 2010 to 14, the period when I was looking into the banking sector, and was in the banking sector for some time before I leave. Most of the banks in the country don't want to do this small transactions, small customer service, because the way a lending decision was done, Hassan, a bank would receive an application for a finance, and then once a week, the credit committee within a bank would gather. They would sit down around a table, 10 people, 10, 12 people, you could imagine the setting, and then, the papers would be there. There would be a folder for each customer. Then people would go through that folder and start discussing pros and cons, and everyone would give their opinion. And then after that, there would be notes made that some additional things would be requested from the customer. The responsible person from the credit department would then reach out to the customer, ask for additional documents, and then the next week people would gather again to make to discuss. And that was the tempo, right? So it wasn't economically, it didn't make sense for banks to serve retail customers, because providing let's say $100 loan would take as much time as providing a $100,000 loan. So by default, due to a lack of automation within this decision-making scheme, the banks had to focus on big customers, and therefore all these payments and low, small financings, that the daily stuff was so unautomated. No one looked into it. So with Alif, we just the opposite. We focused on the retail segment, on the retail customers. We said, okay, how do we make it economically possible? And of course, the only way you can do it is automation technology. And as I said, initially we had to go for automation and our own technologies because we couldn't find any feasible solution out there which would align with our principles. But once we started building those, alhamdulillah, we had better people came to our team. They drawn by this challenge, right? They are smart people. They want challenges to fix, and this was an amazing challenge, right? So alhamdulillah, great people started coming. Abdul Qahar, Habib, Mustafa Shorukh, lots of other amazing IT people, and we've built our own core banking system, our own client relationship management software, our own payment services, we built the first. So before us, there was the card system in Tajikistan, Hassan, 1.5 million cards, and that's a huge number for Tajikistan. It was the largest card system, a local card system called Korti Milli, but you could not make online payments with that card. You could only go and withdraw from ATM. So within Alif, we built a software, the technology, which enabled not only our cards, but all the cards in the country to be able to be used online to make card-to-card transactions, to use your card on an online store, or to receive remittance, or to send money. So for many years, that card system was purely to take your salary, go to ATM, withdraw cash. From time to time, you could just pay with a post terminal machine, but you could not use it online. Our team, alhamdulillah, has been able to change that, to fix that. Then we launched our Alif Mobi app, which quickly became one of the most dominant ways to pay for lots of services. Today, when you go to Tajikistan, every shop has a QR code. You can pay for, you can pay for any goods or service on the, scanning that QR very fast. And again, as I said, hundreds of services within Alif Mobi. And today, those decisions that I mentioned, that 10 years ago, once a week, a team of 12 people would come and sit down and make a decision. We make 150,000 such decisions per month, and 80% of them take seconds within the app. In Uzbekistan, we make 30,000 such decisions per month. 80% of them are done by AI. We called our AI a very nice local name, Gulchatai. A Gulchatai is a Central Asian traditional name. If you have Central Asian listeners, they would surely have heard of it. And Gulchatai makes those decisions. She makes it live. And if you see as the software runs in the background, it's amazing. This as it captures all the data points and makes the probability calculations and says, yes, decision for this person, or this is the conditions for the other persons, and it's all a matter of seconds. And we're able to, alhamdulillah, we've been able to build very strong IT team, very strong IT banking infrastructure, and that has been part of the reason that having built this amazing machine, amazing technological sort of stack, we thought we can do more than, inshallah, we could actually, use this infrastructure in other countries as well. And probably we'll talk about how Alif is expanding beyond Tajikistan, Uzbekistan, but those, built within those constraints, Hassan. Because of those constraints, alhamdulillah, Alif became a leading challenger bank, a leading neobank in the region, and in particular, the leading challenger bank which works with Islamic finance principles.
Yeah, absolutely. I'd like to talk about Uzbekistan in a second, but one thing I wanted to ask you, Abdullah, is that a common criticism of Islamic fintechs, or fintechs in general, is that they're just replicating what's already out there, or digitizing what's already out there. From your perspective as a creator of a digital bank, albeit a microfinance institution, and then transitioning to a more Sharia compliant in name, but in function you were Sharia compliant. How difficult is it to structure Islamic finance products and make it pari passu, or make it as competitive as, say, like a traditional Islamic banking product?
That's an amazing question, Hassan. Amazing question, because indeed, unfortunately, I see that quite often, there is this, sometimes certain Islamic banking products are followed in word of, let's say, IOFI standards, but not in the soul, not in the principle. And there are certain practices which, like, for example, commodity murabaha, when, to just make sure that you follow the word of the law, let's say, the word of Islamic finance. An Islamic bank would go and buy a commodity. Let me give a simple example. A customer wants a £10,000 loan. They go to an Islamic institution. The Islamic institution cannot give money and charge money on top, and then they would then buy a £10,000 worth of copper, sell it to the customer for £11,000, and say, now, we've sold you this for £11,000, but you don't have to pay us now, you can pay us later. Essentially, a debt obligation is created. The customer doesn't obviously need copper. They go sell it to someone else, and obtain it £10,000 or maybe lose a bit in the transaction cost there, and then they get their £10,000, and now they own 11,000 to the bank for that loan, and essentially a loan, an obligation has been created, which is very similar to a traditional banking obligation, but it's been done through that copper transaction. Now, obviously, this feels wrong. It's just like it's not following the soul. It's following, it's following the letter of the law, if you like.
Form
And
of a
that's what
substance, form of a substance debate, right? It's
exactly, and that's why I understand when someone sees this sort of practice, they question the Islamic banking itself. Like, is that what it's supposed to be? And the answer is no. Obviously, it's we in Alif have always thought about the soul first, the principle first. So let's talk about the principles, and let me bring a simple example which would clarify a difference between an Islamic finance and traditional finance. The simple one, and then we can talk about more complicated ones. So in the simplest form, a traditional loan is, and using the same example, you borrow £10,000, and then you owe the bank a certain interest, which is can be compounding or not compounding. And if it's compounding, if the longer you don't pay, the geometrically faster your amount that you owe to the bank grows. And if it's not compounding, then it grows sort of arithmetically, but it keeps growing. The longer you hold the money, the more you owe to the bank, and that's it. It's sort of that's it mathematically, and structurally. It's generally fairly sort of simple. The bank gives you money, you owe money back. In comparison, in an Islamic banking, when you talk about murabaha, normally this is what's supposed to happen, and quite often that's what happens. Assuming we're not talking about commodity murabas, etc. So what actually happens is, and should happen is, the Islamic banks ask you, okay, what do you need the £10,000 for? So the customer says, all right, I need the £10,000 to buy, let's say, a car, and the Islamic bank buys the car for £10,000, sells it to the customer for £11,000. And fixes that 1,000 as its markup, and the £1,000 is maximum the Islamic bank can earn in this transaction. It's transparent, it's known, the customer knows in advance that there's this £1,000 extra that I'm paying on this car. It's trade based. It's linked to an asset or a service. It's linked to an economic activity, an actual sort of economic value creation. There's a car in this transaction, and it doesn't matter whether I pay for that finance early or late. Let's say the maturity is 1 year, and it doesn't matter whether I pay in 2 years or in 6 months. The Islamic bank still has only that £1,000 it can claim for me in terms of its revenue. So if I pay tomorrow, the Islamic bank can still ask me to pay that £1,000 extra. If I pay 2 years, 5 years later, it still has maximum that 1,000 that it can earn on this transaction. In comparison, in a traditional £10,000 loan, if I pay tomorrow, I might pay less. But if I pay 3 years later, quite often I have no idea, because, well, especially if I'm not super financially literate, and especially in a compounding environment, that loan can grow hugely in size, in amount, how much I might owe to the bank. But in any case, sort of the key principle here is that how much I owe to the bank is not fixed. So a pure murabaha versus a pure loan, the Islamic bank has a actual nominal limit, £1,000, that it can generate from this transaction. Traditional loan, the limit is set by the percentage, and it might go, absolute terms might become another £1,000 or another £10,000, depending when I pay for that loan. So that's purely the mathematical difference between the most simple traditional and Islamic products. And then beyond this simple math, there's of course other things which also make Islamic finance different. Islamic banking is always linked directly to an economic activity. An Islamic bank cannot just give you money and ask for money back. It has to finance a certain either asset or a service. It has to finance something. So it's steeped into real economy. It's by default cannot finance unethical products. By default, it cannot provide financing for gambling or alcohol or arms, etc. There's a certain process that needs to be followed, and etc. and so forth. There's significant avoidance of gharar, all types of uncertainty, which in a traditional setting, or whether you look at it as positive or negative, of course, there are lots of complicated financial products, which sometimes lead to things like financial crisis, sometimes not. But in an Islamic construct, they don't work. You can't do things which have those sort of outcomes. So there are many things one could talk about, but purely for many people who just want to understand the mathematical difference, it's that initial sort of formulaic difference that I talked about.
Yeah, but Abdullah, like I agree with you. It is like based on trade and real economic activity. And like if you go to Islamic finance literature and talk to the pioneers of the modern Islamic finance system, it's supposed to be a completely different economic model. But what we see today is that Islamic banks, rightly or wrongly, are being criticized for saying that they're just replicating what's already out there. So like if you look at some of the products, they may have different names or different legal structures, but the economic outcome is still the same as a conventional bank.
Um, what the Islamic banks do or do not, I obviously cannot answer on behalf of, let's say, certain Islamic banks. But what I can tell you, the way we do things in Alif, and as I mentioned, from a perspective of a finance, it's always linked to an asset. It's always a murabaha type transaction. On a perspective of a deposit, it's been challenging for us, but from the start, our deposits have been based on revenue sharing, Hassan, and that's miles apart from traditional banking.
But
And
like a
that's
proper mudaraba, like a proper mudaraba.
exactly it. The structure, the Sharia compliance structure name is Mudaraba, and the way we put it in work is the following. So we don't promise a fixed rate of return to our depositors. One might, today, Alhamdulillah, we have thousands of depositors. We have more liquidity. We have more cash than we can handle, in the sense that we cannot place it into our portfolio, where we're over liquid in Tajikistan. But initially, it was so challenging to explain to customers what revenue sharing is. They've never seen it. There's been no bank in Tajikistan and no bank in Central Asia. Maybe there was an exceptional Al Hilal Bank, I think, in Kazakhstan, and I'm not sure whether they had a deposit, but there's been no bank they've seen, heard of, that had or a financial institution that had a revenue sharing deposit. And uh, it's been challenging to explain to people, and some people have thought about it. Is it like some kind of scam or something? What is this revenue sharing? So we had to explain and educate and go, and show with our track record and history as it built up, that actually it's a viable, economically sensible way of working with a deposit, an amana. If we do well, we give more revenue to our customers. If we don't do well, we give less. And it's better economic structure, because we're not, some traditional banks which went bankrupt because of the mismanagement of interest rate risk, where they owe more interest on their liabilities and they earn less on their assets. In a setting of mudaraba, that's much harder to happen, because your liabilities are indexed to how well you do. And of course, some customers might not be very happy about it. They might say, I prefer if you give me a fixed deposit rate. And that's, of course, the challenge that we in our case had to face. And initially was hard, but alhamdulillah, today, alhamdulillah, today we're over liquid. We always have more funds that, in the last several years, we've always had more funds that we could place into our portfolio.
Very good. And
And I don't think that in any way replicates a traditional model. So yeah, alhamdulillah, it's
very good. The other thing I wanted to ask you, Abdullah, was on Alif. Obviously, you mentioned like you've expanded into other markets. I think the most prominent one is Uzbekistan, right? You're very active in Uzbekistan.
I may have missed the question, the start of the question. Say again, Hassan.
I was just going to say that you're very prominent in Uzbekistan. Maybe you could talk a little bit about Uzbekistan and like what you're doing there.
Of course, of course. So Uzbekistan is a neighboring country to Tajikistan. Again, a very beautiful place. Lots of historic, cities like Bukhara and Samarkand, and these places which people like Al-Bukhari come from. That region in particular. I mean, it's with Al-Farabi and Al-Bukhari and lots of other strong historic figures. It's definitely worth for your listeners to travel to and inshallah to visit. And Uzbekistan and Tajikistan, unfortunately, for many years, due to various reasons, political reasons, unfortunately, there was not much interaction. You couldn't easily travel. But Alhamdulillah, with the new president, with the last many years now, with the coming of the new president, there has been a very, very positive shift. The first planes started to fly between Dushanbe and Tashkent, the capitals of both countries, and Alhamdulillah, we've been privileged to be one of the first entrepreneurs from Tajikistan to get to go and see Uzbekistan's economy. And when we initially went there, everything was wow, and it is still wow, but like the economy is growing fast. The country, the regulators want to make things easier for foreign investors, for domestic things. The taxation is much simpler and business friendly, and there's so much talent and yeah. So we as we were researching the market, we saw that the products we have built in Tajikistan are similarly needed in Uzbekistan. And of course, there are a lot of solutions were already out there. But when it came to specifically within finance, we saw that the rates, the markups charged within stores for a installment based sale were much higher. So if you went to a store and you wanted to buy a laptop, if you paid right away for that laptop, you would pay let's say $100 to keep it simple. In Uzbek sums, today the exchange rate is 1 to 10,000. But anyway, so let's keep it simple. $100 for a laptop if you pay now. If you pay in installments within 1 year, it would cost you $150, and it's very expensive. So we thought, okay, the economic dynamics all support that there's this market which can be done. And again, the reason for those is again technology, etc., that we can bring in from our experience in Tajikistan, and that's the sector we started. Point of sales finance. Alhamdulillah, we became one of the leaders in this segment. There were many players that were already also doing this, but we believed that we could do it better, faster, etc. And we were able to expand rapidly within all the regions of the country, purely sort of in a fintech way. We have just offices in Tashkent, but we work in the entire country, and it's we only have like a back office, as it were. We're not actually in the stores, etc. So all of it is done remotely, and then we launched our payments application. So Alif Mobi is also fast sort of growing into leadership roles in Uzbekistan, although there are very, very strong local players in Uzbekistan within payments. And lately, of course, there are many other strong players that arrived, like Uzum and others who invested heavily in marketing and regulatory and banking, etc. So it's a very dynamic, very interesting place to work.
Definitely. I think since 2017, as you mentioned, with Shavkat Mirziyoyev,
Yeah.
president, opened the economy and the FDI. If you look at the FDI levels foreign direct investment levels into Uzbekistan. It's been a lot, and I think the dynamics of the country. It's a large, obviously, it's a larger population than Tajikistan, and obviously, it's got its own idiosyncratic story. But they've done a lot, and I think in our third episode we had Odil Bekisakov, the former deputy finance minister, and he walked us through some of the reforms that have taken place over the last 7 years, and some of the challenges that the country is facing. But Abdullah, one thing I wanted to ask you, you're active in Uzbekistan, and are you a fully licensed bank in Uzbekistan?
So no, as we have a payments license in Uzbekistan. We have an e-commerce framework in Uzbekistan, and we are considering applying for a banking license, but we're not yet a bank in Uzbekistan.
Right, and you're not just active in Uzbekistan, right? I think you've expanded to other countries as well, not just in Central Asia.
Correct. Yeah. So we're now working on, but and just before I move there, just in Uzbekistan, the way we work is pure murabaha. By the way, Hassan, we buy. The customer needs, let's say, a washing machine. We buy the washing machine, we put our markup on top, and then we sell, etc. So, in fact, because we don't actually need a banking license in Uzbekistan to operate the way we do, it's been never sort of a high priority for us. And alhamdulillah, we've been able to build Alif without even the banking license, because again the regulatory framework, everything is quite workable, and the taxation works. But with that experience, alhamdulillah, we were then considering generally long-term vision for Alif, because if you look globally, the Muslim population sort of makes about 25% of the world's population. But if you look specifically in the unbanked part of the world, 1.7 billion people, almost half are from Muslim countries. And we believe that the financial inclusion is hugely important for improving well-being of people, and we set ourselves a more sort of ambitious, a more long-term challenge vision to build a global leader in Islamic fintech. And we started looking in which countries we could expand. We traveled to a number of countries, and we decided that we would start in Pakistan and in the UAE, and try to serve those groups of customers who aren't served by the existing financial sector. In the UAE, for example, while there are lots of financial institutions, we see that the blue-collar workers, migrants, they are relatively underserved, and we are focusing on them in our services in the UAE. In Pakistan, we see that generally speaking, the access to credit has been one of the things that hasn't, similar to Tajikistan sort of trends. In Pakistan, although Pakistan is hugely larger, 220 million people, and roughly 1% have access to finance, are able to borrow, and those are the sort of themes that where we thought we should contribute and try to also be part of the solution if we can, and start to expand.
And these are all very recent, right? The launch in UAE.
Correct. Yeah, these are recent. So in the last sort of 2 years, we've been working on these expansions.
Fantastic. And Abdullah, as we bring the podcast to a close shortly, I wanted to talk to you about your new venture, Ion Capital. I think you've launched this very recently, and
Yeah.
it's based in the UK. Maybe you could tell our listeners a little bit about Ion Capital.
Of course. So to continue that, to the theme that we were just talking about, Hassan, to build a global leader in Islamic fintech, and finance everywhere. It's a highly regulated sector. Quite often you need banking license to be able to do most of the things within the sector. Not always, like I said, in Uzbekistan, for example, without a banking license, we have lots of products. But generally, if you want to be strong worldwide, a banking license, especially in a developed country like the UK, for example, plays a huge role. And with that in mind, and alhamdulillah, with the experience, albeit in a much smaller country, of building a bank from scratch, we thought, okay, where else can we establish a bank? And as we were looking at different countries, quite often you see that a country would require, especially within the banking sector, that more than 50% is owned by locals, or you would see that quite often there would be very high price tag, very high capital requirement to establish a bank, 50 million, 100 million plus. And UK stands out in this respect due to the fact that the regulator really wants to promote competition, to reduce the market share of the banks which are too big to fail, because that's been an issue in the last global financial crisis. And since then, the regulator actively promoted new banks, and many challenger banks have established since. And there's a level playing field. You can be a foreigner who could come in and try to establish a bank, and again, there are many examples. And the minimum capital requirement has been set at from pre-Brexit days at €5 million, which was sort of more or less similarly across Europe. The Islamic banking framework is in place in the UK. You can actually work as an Islamic bank. There are Islamic banks. And therefore, the UK looked like a top choice. And I believe it's a top choice. So I've moved to the UK, and our long-term vision is hopefully to establish an Islamic bank, a challenger Islamic bank in the country. And while the Islamic banking assets in the UK are 10 times more than the Islamic banking assets in the US, for example, there's still a very small fraction of total banking assets in the UK. The Muslim population is growing. It's been 4.9% in 2011. In 2021, it grew to 6.5%. If this trend continues, by 2028, we might see numbers close to 8%. It's a growth. It's a secular growth. There's a very important shift in that respect. But if you look at the Islamic banking, you see that the assets are 0.1% of the total banking sector. It's in type of products and the ecosystemic products. The banking sector still has to catch up, and we felt that there can be value that we could try to bring, and that being the vision for the UK, we obviously have to start from something simpler and faster, just to sense check our hypothesis to what extent what we believe to be true is actually in practice holds. So we looked where we can start fastest and decided that our minimum viable product would be to provide Islamic car finance for businesses, and in particular for the drivers of private hire vehicles like Uber, Bolt, etc. And the reason we chose this particular segment is that, first of all, there are about more than 300,000 private hire vehicle drivers in the UK, and predominantly they come from Muslim countries. So in London, where the demographic data is available, about 70% come from countries with major Muslim populations like Pakistan, Bangladesh, India, Somalia, Afghanistan, etc. So 70%. There's a major push to move towards cleaner cars which are better for the environment, and plug-in hybrid. The private hire vehicle sector is where the regulators are pushing the most to make that change happen. So in London, you can no longer register a car which doesn't fit certain standards. So these cars, which can be either electric or plug-in hybrids with low emission, these cars are expensive. And for a driver to change from their old car to these sort of more expensive cars, you need financing. And generally in the UK, 90% of cars are bought on finance. So obviously to buy a an EV or plug-in hybrid car, you need finance. However, there's no Sharia compliant finance available to this segment. And that's why we decided this is the segment we'll start, inshallah. And alhamdulillah, since we started Ayan, we have been able to launch our services within 6 months. So we registered in September 2023. By sort of end of January, we have been able to launch our services to our first clients. And since then, alhamdulillah, we've built in the first sort of 4 months, we built a portfolio of about £1 million. We've been able to raise 2.3 million pounds in terms of equity and debt, sort of this seed stage, it's been great. We've had alhamdulillah good support from various aspects, and in terms of this early stage fundraising, for example, Curate Capital has been instrumental. Where we on that platform we spoke to the community of investors who also wanted to invest in a Sharia compliant way, to have their sort of income from a Sharia compliant source. That's where we raised our debt funding, and we put our own seed equity, and now we're building the initial sort of portfolio that alhamdulillah is performing quite well as well. So that's been the journey so far with Ayan.
Fantastic. And Abdullah, like just on Ayan with the car leasing, is it similar to like what you said earlier about Murabaha, or is it done on a different?
Now, amazing, fantastic. Glad you raised this question. So when you look at a car finance, there are two major products that you can use which are Sharia compliant. You can use a Murabaha, or you can use an Ijara. In a Murabaha, the Islamic lender buys the car, puts a markup on top, sells the car to the customer. And an Ijara, the Islamic bank buys the car, retains the ownership until the end, rents out the car. So the underlying is a rental agreement. And in the UK, the regulatory name for it, Ijara wa Iqtina. And then at the end transfers the ownership. Now, Ijara wa Iqtina is very similar to a hire purchase. There are some differences, but when it comes to the simplest way to explain a Sharia compliant product from a non-Sharia, when I explain as a Murabaha versus, let's say, a traditional finance, they are kind of on the two sides of this spectrum. An Ijara and a hire purchase are fairly similar. So you even have sometimes some clerics which would say, when there's a lack of alternatives, it's okay to go for a hire purchase, etc. But a Sharia compliant Ijara has certain other additional sort of things, and there's a certain process in place. There's certain sort of risks which vary, etc. But yeah, we in the UK we do Ijara wa Iqtina.
Very good. And Abdullah, just one question. Why do you think the incumbents haven't offered this kind of financing to people in the market?
It's a good question. I think one of the reasons is that, generally speaking, in a broader, if you don't look in private hire sector, if you look at broader market, it may look like that, why go through all the hassle? It took us, Hassan, about those 6 months. the most part was structuring the product itself. We have an amazing Sharia board, Alhamd Advisory. And then we have our lawyers in the UK, and then going back and forth. The first thing we started was creating the Ijara wa Iqtina product, and the last thing we finished before launching was the Ijara wa Iqtina product. So that was the thing that took us the most time. And I think for the majority of lenders going through this going through that process, and not just the process of creating, but actually when you provide the service, you have to have a certain process which is different, and those risk variables which are different. It probably doesn't make sense, because they look at the market, they say, okay, majority of population doesn't probably need this service, and then even maybe the Muslim population, given the lack of alternative, some of them have to use this traditional services. So probably that is part of the reason why there isn't as much offering of Sharia compliant car finance services.
Yeah, I agree. And how can people find out about Ion Capital, Abdullah?
Best place is our website, ioncapital.co.uk. We're also on social media, LinkedIn, Instagram, Facebook, etc. And we're based in Paddington, here in London, in Paddington, One Kingdom Square, the Sheldon Square, and people can visit us. We'd love to have guests. That's how one could find about us.
And are you active on social media as well yourself, Abdullah?
I'm not super active, but LinkedIn in particular, I check my messages from time to time. But for any sort of direct correspondence, email is probably best, and that's AK Alpha Kilo at ioncapital.co.uk.
Fantastic. Abdullah, I wish you all the best in your new venture, and thanks for coming on the podcast.
Thank you very much, Hassan. It's been my pleasure. Thank you very much.
All the best to you. All the best.